Good morning, everyone, and welcome to the Accounting and Reporting Update. My apologies for the brief delay in our start. We want to welcome you to and all of our NYSEC members and guests that have joined us today for a webinar on accounting and reporting. This webinar is presented by the Office of the State Comptroller, our partner in the 2021 Virtual County Finance School. The Office of the State Comptroller have been supporting this conference for many years and is the source for CPE credits for our membership. Thank you to Comptroller Tom DiNapoli and his staff for their generosity and support of NYSEC's educational programs. A special shout out to Dan Accolino for serving as the lead coordinator for this program from OSC. First, I'd like to go through some housekeeping messages that you should know about in terms of how we conduct the program. The program will be recorded and posted on the NYSEC website under Education, and then just click on Finance School and you will see it listed by today's date. You can download a recording, and you can also download a PDF of the slide deck. You can also find a copy of the CPE form from OSC as well listed on the website. Again, you can access this after 1:30 today. There is a process that we go through with the recordings that we have to edit and so forth, so it takes a little time, but we'll have it up by 1:30. Also, we encourage you to submit questions for the Q&A session at the end of the program. The way you should do this is by going on your dashboard and clicking on the Questions tab. You can type in any question at any time during the presentation, and we will read and get to these questions at the end of the program during Q&A. And that's it for housekeeping. On behalf of NYSEC, I would like to thank our sponsor for this webinar. The sponsor is NYMIR, which is the New York Municipal Insurance Reciprocal. NYMIR is a licensed, regulated insurer owned by its policyholders over 900 municipalities across New York State. Together, we have built a strong, fiscally responsible company providing property and casualty insurance to counties, cities, towns, and villages, both big and small. So thank you, NYMIR, for supporting this program today. I would like to introduce Mark Stevens, Associate Attorney, Office of the State Comptroller, Division of Legal Services. Mr. Stevens works in the Municipal Law and Finance Unit, which is responsible for, among other things, providing legal counsel to the Comptroller's Division of Local Government and School District Accountability, and technical assistance to certain municipal officials of the state on a variety of issues relating to municipal finance. He has given many presentations to groups of local government officials on the legal requirements of competitive bidding, as well as on conflicts of interest under Article 18 of the General Municipal Law. He has also helped author the memorandum entitled New Piggybacking Law, Exceptions to Competitive Bidding, and the research paper, Conflicts of Interest. Prior to joining the Municipal Law and Finance Unit, he worked with the Ethics Division. And now I'd like to present Mr. Stevens and Mr. Cash, who will be presenting from the Office of the State Comptroller today. And now, without further ado, our presenters.
Good morning, everyone. My name is Brian Shevers, not Mark Stevens. Mark Stevens is a very nice guy and an attorney with our office, and I work with Mark a lot on a lot of various accounting issues. But thank you very much for that wonderful lead-in, and I hope everyone's doing well on this Monday morning. But my name is Brian Shevers, and I'm going to be presenting today with my colleague Eric Cash. We are with the Professional Standards and Staff Development Unit of the Division of Local Government and School Accountability in the New York State Comptroller's Office. Today I'm going to discuss with you information about GASB Statement 84, and how implementation will have an effect on local government and school district reporting of fiduciary activities or activities no longer classified as fiduciary in the near future. Eric will be discussing the impact of GASB 87 on local governments in a little while. First, a little background about myself. I've been with the Controller's Office for about 9 years now. I spent the first 4.5 years with the Newburgh Regional Office conducting audits of counties, cities, towns, villages, fire companies, and school districts. The areas I audited varied greatly from procurement to budgeting practices of fiscally stressed school districts to grant management to fraud. In my last 4.5 years, I've worked in the Professional Standards and Staff Development Unit, where I worked on a variety of tasks from updating our auditing standards to meet the requirements of the new Yellow Book, to providing technical assistance to local governments and school districts, and developing accounting and reporting guidance for things like GASB Statement 84, fiduciary activities. And with that, I'll get on to our goals for today. Our objectives are to provide background on the rationale for GASB Statement 84, to discuss significant accounting changes to commonly reported fiduciary activities, to highlight some resources, including the newly updated LGSA accounting bulletin, excuse me, to describe accounting and reporting requirements for fiduciary activities in the AUD and ST3, and highlight some major changes, and lastly, to answer any outstanding questions. And first, just want to give a brief disclaimer that this presentation was designed originally with all local governments in New York in mind, and that will be reflected in a couple of the slides. But I will make note along the way how these examples could apply to counties as well. Okay, with that, next slide, please. All right. Well, I'm sure that many of you have had some training on Statement 84. I'm going to briefly give a little background on the statement. Specifically, the purpose was to provide guidance on identifying fiduciary activities for accounting and reporting purposes, to establish specific criteria to use in determining whether a government has a fiduciary responsibility, and implementation is designed to enhance accountability, consistency, and comparability of fiduciary activities across governments. Prior to GASB 84, the only criteria previously provided was in GASB 34. And what Statement 84 does is it greatly expands on what exactly a fiduciary activity is and clarifies how these activities should be reported. In the past, this led to many entities making their own determinations for which activities would be fiduciary in nature. And according to the Governmental Accounting Standards Board, this led to a lot of inconsistency in reporting. And just for your reference throughout this, if I'm talking about the board or GASB or something like that throughout this presentation, we're talking about the Governmental Accountability Standards Board. Thanks, and to the next slide. So we're going to start off discussing the first part of the statement, which involves using the criteria prescribed in Statement 84 in order to identify what, in fact, is a fiduciary activity. GASB 84 provides a step-by-step flowchart to help determine which activities are fiduciary in nature. We prepared a questionnaire using the same criteria as a more manageable resource to help local governments and school districts make this determination. Essentially, the chart takes the described criteria from the statement for what constitutes a fiduciary activity and places it in a usable order to help users of the statement make a determination. The questionnaire, which we prepared for the accounting bulletin, uses what is detailed in Appendix C of Statement 84, and it places it in a more user-friendly format. For those of you who haven't read or used Appendix C yet, it's about 3 pages long and can be fairly cumbersome, but I do know that some people do prefer to use that. I'm going to discuss the questionnaire a bit more in a few more slides. Move on to the next slide. First, I want to discuss a couple of key definitions which Statement 84 outlines for us that come up a lot when attempting to determine if assets should be reported as fiduciary. These are key definitions local governments and school districts will need to understand in order to and apply in order to determine which activities will be determined to be fiduciary. They're also new. The first definition is with respect to control. A government controls the assets of an activity if the government holds the assets or has the ability to direct the use, exchange, or employment of the assets in a manner that provides benefits to the specified or intended recipients. Restrictions from legal or other external restraints that stipulate the assets can be used only for a specific purpose do not negate a government's control of the assets. Further, the board clarifies that a government uses an asset when it expends or consumes that asset for the benefit of individuals, organizations, or other governments outside the government's provision of services to them. With respect to directing the employment of assets, the board clarifies in Statement 84 that even when a government appoints a designee to act on its behalf, the designee is performing the government's fiduciary activities and not assuming them. Thus, appointing a designee to act on its behalf does not alter the government's ability to direct the use, exchange, or employment of the assets. That aspect has come up a lot during a lot of the technical assistance questions I've been dealing with, and I think it's just an important concept to understand and focus on. That just because you're appointing a designee to act on your behalf does not negate the government's fiduciary activities associated with them. And with that, we'll go on to the next slide. Okay, on to own source revenues. So revenues that are generated by a government itself. They include exchange and exchange-like revenues and investment earnings. Derived tax revenues and imposed non-exchange revenues are also included. Some examples of exchange and exchange-like transactions would be things like water and sewer charges. Derived tax revenues are things such as sales and income taxes. And again, I just want to reiterate that these definitions are important because of how frequently they come up when making a determination if assets are fiduciary in nature. Go to the next slide, please. All right. So in order to help visualize what we're talking about with respect to the decision-making process entails, or what that decision-making process entails, in determining whether or not your assets are fiduciary, we put together a couple of examples using the questionnaire, which walks you through some of the considerations you're going to need to make. First, let's discuss the assumptions we're going to make with this example. They're good illustrations of the types of things you're going to need to evaluate with respect to your own local governments or school districts. Obviously, this is one of those slides that talks about another type of local government. So just for today's presentation, let's pretend that we're talking about a county is holding assets for a ski club instead of a school district holding monies for a hockey team booster club. All other aspects of this aspect will be the same. This is not a situation I expect counties to run into. However, the decision-making process with respect to evaluating their own fiduciary activities will still be the same. Specifically, the assets of the ski club that the county are holding are not a component unit. They're held in a county bank account. They're generated solely from outside fundraising. They are not held in a trust, and they are administered entirely by the booster club. With that, go to the next slide. All right. So the first question we have to look at is the entity a component unit? Well, what is a component unit? Per GASB 14, component units are legally separate organizations for which the elected officials of the primary government are financially accountable. In addition, component units can be other organizations for which the nature and significance of their relationship with a primary government are such that exclusion would cause the reporting of the entity statements to be misleading or incomplete. So we know from what was previously stated that the ski club assets are not part of a component unit. Following the yes/no instructions, you see that since it is not a component unit, you will go to number 5, which asks, does the government control the assets? So as we just stated before, a government controls the assets of an activity if the government holds the assets or has the ability to direct the use, exchange, or employment of the assets in a manner that provides benefits to specified or intended recipients. In this instance, we know that the assets are being held in a county bank account, and therefore they do have control of these assets. And with that, we can check yes to number 5 and move on to number 9. We'll go to the next slide, please. Thank you. Looking at the at number 9, are the assets held for pension or OPEB arrangements? Here we can determine that these assets are not held for pension or OPEB arrangements. Nothing too tricky there. You can say no for number 9. With number 10 and 11, we have to go back to the definition of own source revenues discussed on the previous slide. So already seeing how all of these relevant details and definitions provided immediately come into play for making determination of whether or not these assets are fiduciary in nature. So these assets are solely derived from ski club fundraising, not solely from own source revenues. Therefore, you can say no to number 10. Moving to number 11, We know that these assets are not generated from government-mandated non-exchange or voluntary non-exchange transactions, as they are solely derived from ski club fundraising. Therefore, we can check no into that box and we move on to number 6. So you can see as we're going through this that while the questions themselves appear relatively short and succinct, there's so much more information necessary to understand the questions in order to make these determinations. It's a very tricky statement in that fashion. All right, you can go to the next slide, please. All right, number 6, are the assets held in a trust or equivalent arrangement and the government itself is not a beneficiary? It was noted that these assets are not held in a trust, so we can say no for number 6, which then leads us to number 7. Number 7 asks, are the assets for the benefit of individuals and the government does not have administrative involvement or direct financial involvement? It was noted that the ski club administers these funds, meaning they approve all the eligible disbursements with no involvement from the county, including no county policies impacting how these funds can be spent. Footnote 1 of the statement provides some examples with respect to administrative involvement and direct financial involvement. And these are important concepts. It states, for the purposes of this provision, a government has administrative involvement with the assets if, for example, it monitors compliance with the requirements of the activity that are established by the government or by a resource provider that does not receive the direct benefits of the activity. A government has administrative involvement if it determines eligible expenditures that are established by the government or by a resource provider that does not receive the direct benefits of the activity, or has the ability to exercise discretion over how the assets are allocated. A government has direct financial involvement with the assets if, for example, it provides matching resources for these activities. So these are pretty common things for local governments to be involved with if they're holding monies for something. So this is just some more definitions to be aware of as you're going through and making your determinations. So as you can see, noted on the slide, the assets are for the benefit of individuals and the assets are administered by the booster club, not the county. And the district does not contribute. They have no direct financial involvement. So in this case, I would say that the answer is yes to number 7, and we can therefore go to number 15. And we included number 8 on the slide as well, just for reference as to how the criteria would have continued to go. Again, I don't believe that this specific type of situation, these types of situations are common with counties in New York, but I have seen a lot of unique situations of reasons for counties holding monies they wouldn't expect. And while you may not have this specific example, the example does show the type of thought process that you're going to need to have while making your own determinations as to whether or not assets should be reported as a fiduciary activity or not. All right, and we are on this slide here. Okay, in this example, the assets will be reported in a fiduciary fund. You can see number 15 right there. It says the assets will be reported in a fiduciary fund, specifically in a custodial fund since it's untrusted. And one important thing is that every use of the questionnaire will result in determination of how the assets should be reported. So again, this is nothing new from what's in the appendix of GASB Statement 84. It's just in an easier to use format. You will still need to understand all of the underlying definitions in order to properly assess all of your fiduciary activities. That is the tricky part of the statement. Every question requires an understanding of a lot of different accounting concepts, some of which were from previous statements and some of which are new to GASB Statement 84. It's a lot of work to get the initial understanding to go about implementing, but I feel like once we get our initial implementation done, things should be a little bit smoother down the road. All right, on to the next slide. Okay, example number 2. We added this example involving funds held as a bid deposit. As this is an area we have received a lot of technical assistance questions on, as local governments and school districts have been moving to implement Statement 84. This example is a common occurrence for local governments, so again, we just wanted to bring it to the forefront since there will likely be a lot of adjustments. Again, for these slides, you can just replace village with county, and all the other factors will still hold true. In this example, county is holding the assets previously recorded in the trust and agency fund as part of a performance contract. The funds are held in a county bank account. The contract is to construct a new county building. They are not held in a trust. And if the contractor completes the project satisfactorily, the county refunds the deposit. If not, the contractor forfeits the deposit. Okay. And we'll go on to the next slide, please. So just like we did in the previous example, we'll start off the questionnaire evaluating whether or not the assets are a component unit. And so obviously in this instance, they're not. So we can follow the no column and go to number 5. The question for number 5 asks if the government has control of the assets. So as we previously discussed with the definition and in the earlier example, the county is holding the assets for their own bank account or in their own bank account. And as a result, they do control these assets, and we can mark yes on our questionnaire and go to number 9. We can go to the next slide, please. All right. Looking at question number 9, we can pretty quickly answer that these assets are not being held for pension or OPEB arrangements. Therefore, we can mark no to this question and move on to number 10 as instructed. Looking at number 10, it asks if the assets are derived solely from the government's own source revenue. At a quick glance, one might think that the answer would be no to this question. However, let's think back to the definition of own source revenues as we discussed earlier. The definition states that own source revenues include exchange and exchange-like revenues. In this example, the county is holding the deposit funds as a result of an exchange transaction. The county is holding the funds for its own benefit. As a result, we will answer yes for number 10 and move along to number 14. Similar to the previous example, and I left number 11 in just to show you where we would have gone if the answer to number 10 was no. So we can move on to number 14 and the next slide. Thank you. So lastly, we get to number 14, which is that the activity would be reported with the governmental or business type activities. Yes, exactly. So we see that using the questionnaire and the definitions applying the criteria that they would be accounted for in a governmental fund for the county. And so as I stated before, using the questionnaire should always result in a determination of whether or not the funds you were evaluating meet the criteria of fiduciary activity. In this example, the funds did not. And this is a major change for local governments. So that's just something to be aware of as you're going through and making these evaluations for yourself. And again, things can be administered differently, and every situation needs to be evaluated to determine how you should account for these funds. And with that, we can go on to the next slide. All right. Now that we have looked at some of the criteria outlined in Statement 84 for how to go about determining what is a fiduciary activity, let's now take a look at the second aspect of the statement, how to report fiduciary activities. First, they outline 4 types of fiduciary funds. 3 of these are the same as prior guidance, and 1 is notably different. So of the 4 fund types, 2 are available for New York State and local governments and school districts. 2 are not available for local government or New York State local governments and school districts. The 2 available are private purpose trust funds and custodial funds, which were formerly the agency fund. The 2 that are not available are pension and other employee benefit trust funds and investment trust funds. Since local governments and school districts in New York State will not have pension or OPEB plans, which meet the criteria stated in paragraph 3 of statements 67 and 74, respectively, these types of funds will not be available. Likewise, most local governments and school districts in New York State will not meet the criteria in paragraph 11C1 in statement 84 with respect to investment trust funds. As such, these will also not be available for AUD and ST3 reporting. And ironically, we ran those things by Mark Stevens. Which is, an important concept that, when you're making these evaluations for some of the criteria that's involved with some of these contracts, it may be a good idea to consult with your county attorneys, because there can be a lot of technicalities which are different based on the laws and based on what's in GASB, specifically for things involving like trusts. So for the purpose of reporting fiduciary activities in the AUD and ST3, we determined using the criteria in Statement 84 that the assets should be reported as a fiduciary activity if the assets meet the criteria of paragraph 11C1, i.e. the assets are administered through a trust in which the government itself is not a beneficiary, The trust is dedicated to providing benefits to the recipients and are legally protected from the creditors of the government. The activity should be reported in a private purpose trust fund, the TE fund. If the assets meet the criteria of being reported as a fiduciary activity, but it is not held in a trust that meets that specific criteria in paragraph 11C1, it should be reported as a custodial fund, which, as we previously mentioned, has replaced the agency fund. Okay, let's move on to the next slide, please. Thank you. Some major changes between agency and custodial funds. Agency funds required only the presentation of assets and liabilities, whereas custodial funds require the same elements as the other fiduciary funds. With respect to the other elements required of custodial funds, while agency funds only require the presentation of assets and liabilities, custodial funds will require the same applicable elements as other fiduciary funds: assets, deferred inflows and outflows of resources, liabilities, and net position. Also, custodial funds do require a resource flow statement because they have a measurement focus. Agency funds did not require this. As a result, we created an appendix in the updated accounting bulletin that outlines the available codes, which should help serve as a reference. And I'll discuss these updates a little more in a few more slides. Okay, on to the next slide, please. So this has been alluded to a few times throughout the webinar, but we really wanted to emphasize that local governments and school districts will need to assess activities currently classified as fiduciary to determine if these activities should still be considered fiduciary in nature, or if these activities should now be reported in a governmental fund as a business type activity or not reported at all. Local governments and school districts need to also consider if there are any current unrecorded activities that would now meet the fiduciary activities definition and may now need to be reported as such. All right, we can go on to the next slide, please. And also, you can expect the following changes to the AUD and to the ST3. The addition of governmental fund account codes for activities that were previously classified as fiduciary in nature. The addition of proprietary fund account codes for custodial fund assets that may be reported in proprietary funds if they are expected to be held for 3 months or less. The creation of a new custodial fund, which will replace the agency fund. And the addition of a statement of revenues, a statement of expenditures, and fund equity for the newly created custodial fund. Okay, and on to the next slide, please. Next, we wanted to talk about some of the most affected areas which were previously almost exclusively reported as a fiduciary activity. First, let's talk about payroll clearing accounts. Now, if you've looked at the implementation guide for Statement 84, Implementation Guide 2019-2, Fiduciary Activities, this clearly indicates that they will not meet the criteria of a fiduciary activity. Specifically with respect to 2019-2 and the payroll clearing accounts, for the reasoning as to why it is not fiduciary, it states, although the government has control of the assets, because it has custody of the cash withheld, the unremitted amounts in the clearing account are a liability of the government. When the deductions are withheld from an employee's pay, the amounts withheld and accrued by the employer become a present obligation to sacrifice resources that the government has no discretion to avoid, and therefore are liabilities of the government. As a result, the government is holding the amounts for its own benefit, and the criteria in paragraph 11C of Statement 84 are not met. So payroll clearing accounts were by far the most common use of the TA fund for local governments and school district reporting. As a result of this update, all of the payroll clearing accounts previously associated with the TA fund will be added to the general fund and to governmental funds when they apply. As mentioned earlier, we included an appendix in the back of the bulletin, which will show which of these accounts were added. Also, you will notice that these codes themselves have been updated as we're moving away from the 2-number codes used and making them all 3 numbers. And I'm going to go through an example for how local government might record their payroll transactions after implementation of Statement 84 in a couple of slides. With respect to student activity funds, don't need to spend a lot of time here. These types of activities were frequently reported fiduciary activity or school districts. Obviously, this example is not directed at you all. However, the concepts are still relevant. The key criterion is usually administrative involvement when you're making that determination. And the implementation guide for Statement 84 provides several examples for how the administration of and surrounding policies and procedures will be determining factors. So again, I'm not going to go through these specific examples in the implementation guide with respect to administrative involvement, as we already touched on this in our first example. However, I would recommend that you take a look at it, as the concept will still apply to a lot of counties and their decision-making process. You just don't deal with that specific type of asset. And for those of you that work in local governments associated with LoSAP, how these assets are reported will depend on if the assets are held from the employer, are from governments or other organizations. We added some clarifying language in the accounting bulletin, which expands on the requirements for LoSAP. I wouldn't expect to see this too often with counties. We have received some questions for how to show LoSAP adjustment in the AUD when LoSAP assets are assets of the employer, if you happen to work with one of these programs. Our current AUD system does not allow for a change in accounting principle to restate fund balance. Thus, you will need to show a prior period adjustment for LoSAP. You should note in the description box that the adjustment was a result of GASB 84 implementation. All right, go on to the next slide, please. All right, we recently issued an update to the accounting bulletin on evaluating fiduciary activities, which I wanted to bring to your attention if you haven't had a chance to look at it. The updates will be greatly beneficial for those looking to make the necessary changes for the filing to be in compliance with Statement 84. These updates include the addition of an appendix detailing select account codes now active in governmental, proprietary, and fiduciary funds. Also, many account codes previously available only in fiduciary funds are now available in governmental funds and or proprietary funds for business type activities. We can go on to the next slide, please. You will also see in the accounting bulletin updates that all account codes in the former agency fund, the TA fund, will be deactivated for the AUD and ST3 reporting for fiscal years ending December 31st, 2020 and after. So obviously we're already there. Applicable account codes have been added to the brand new custodial fund. And we inserted some clarifying guidance on LoSAP assets, as I just previously mentioned to you guys. All right, go to the next slide, please. Next, as local governments and school districts have been implementing GASB Statement 84 for some time now, I just wanted to touch on some clarifying information that has come up. We can go to the next slide, please. Specifically, GASB 84 applies to entities that file an AUD, an ST3, or any other annual financial report required to follow OSC's Uniform System of Accounts. This includes boards of cooperative educational systems, BOCES, and soil and water conservation districts, etc. The 12/31 fiscal year end filers will be the first local governments to file using GASB 84 requirements. School districts will file using the 2020-2021 ST3 using GASB 84 requirements. And we have had numerous questions specific to accounting for payroll using GASB 84. We can go on to the next slide, please. All right. Since this is the most common affected area, especially for smaller local governments, which is not you guys usually, I wanted to briefly walk through an example for how you can account for payroll transactions. As we mentioned in the previous slide, payroll clearing or withholding accounts will not meet the criteria or will not meet the definition of a fiduciary activity for GASB 84 and will therefore need to be reported in a governmental or proprietary fund. When you're going through and recording your entries for payroll, you will need to continue to report the expenditure out of the appropriate fund that gave rise to the claim. And a lot of municipalities who have employees doing work from different areas, this will result in expenditures being made out of multiple funds for the same employees for the same payroll. This aspect is not new. However, where and how you record the associated liabilities with that payroll will be, depending on if you use the TA fund this way. I'm going to talk through a simple example in just a moment. So obviously the figures are made up, so don't read too much into those. In this example I'm going to talk about, a clerk is being paid for work done in the general fund and the sewer fund, and I'll show an example of how these entries might look. We'll Go on to the next slide, please. Okay, let's take a look at this. Here we see that the recording of the payroll expenditure for this employee. They made $8,500 total during this period. $5,000 being paid out of the general fund and $3,500 being paid out of the sewer district. We set up the corresponding consolidated payroll liability in the respective fund, which gave rise to each claim. In the past, this transaction may have set up a transfer to the trust and agency account where the payments would be made from, and the withholding liabilities would be recorded. However, that is not the case now. Go on to the next slide, please. Here we see that after implementing GASB 84, that is not the case. The payments are made directly from the funds which incurred the liability, and consolidated payroll is reduced. Nothing too technically difficult, but a major change in concepts from the past. Go on to the next slide, please. Lastly, we see a major change in that we set up all of the withholding liabilities in the corresponding fund, which gave rise to them. In order to make this possible, we added all of these withholding account codes to the funds which would have payroll so they can be properly accounted for. I envision this will require a lot of initial effort at first for you to configure your software or record keeping system to record payroll in this new way. But once that system is in place, recording payroll will not be more difficult than it is right now. I encourage you to discuss this with your CPAs or your software providers to ensure that your payroll withholding accounts are properly recorded and configured. Again, this is not the most technically difficult change, but it's a major change nonetheless due to the size and frequency of the payroll transactions. Okay, now on to the next slide, please. Some resources that are available to you to aid in your AUD and ST3 implementation are the original GASB literature, which I highly recommend that you read, GASB Statement 84 on fiduciary activities, and as we mentioned before, the implementation guide 2019-2 of fiduciary activities, the OSD accounting bulletin on fiduciary activities, which I've been referring to several times throughout this presentation, which I believe we may have just implemented in the past or updated recently again. So it's constantly evolving as we're trying to find more pieces of guidance to put in that. So keep an eye out for that. Technical inquiries with the GASB. I've talked to a lot of CPAs who have been doing a lot of their own inquiries as well, and we've been sharing some information. So that's been a very useful tool. And lastly, feel free to reach out to us. That's our email address down there, the Division of Local Government and School Accountability, the Professional Standards Unit. Feel free to send us an email with any of your implementation questions, and we'll be happy to help you out. And we can go on to the next slide. Oh, right. Oh. Just jumping ahead.
All right, thank you, Brian.
Okay.
We're a couple ahead still. It should be a GASB 87 objectives. Yep, there we go. All right, well, good morning, everyone. I'm Eric Cash, and I'm going to briefly talk about GASB Statement 87, which is updating the accounting and reporting requirements for leases. Here are our objectives for the presentation, but I will start by briefly giving a bit of my background information. So I've been with the Comptroller's Office for about 5 years now. I spent my first few years auditing out of the Binghamton Regional Office, working on a wide variety of projects, including audits of every type of municipality. I started here in the Professional Standards and Staff Development Unit a couple of years ago, and have been working on analyzing these GASB statements, developing and maintaining our guidance documents, and answering technical assistance questions and training our staff. So today I'm going to provide some background on the rationale for GASB Statement 87. We'll discuss the new lease definition, the lease term, and exceptions to the statement. Describe what you should be doing now to prepare, and then we'll try to answer any outstanding questions if we can. So at this point, we've released an accounting bulletin titled Lease Classification Changes as Required by GASB Statement 87, which should have been email blasted out to all the county CFOs back in December, but you can also find it on our OSC Local Government Publications page. This bulletin contains all the information I just discussed in the objectives here, and The accounting and AUD reporting guidance will be released at some point in the future. So we won't get into any specific accounting and reporting changes for leases under the new standard, but we're hoping this can serve as a notification to everyone that the lease accounting will be changing sooner rather than later. And we have some tips on how you guys can prepare for this. Next slide, please. So the statement is effective for, I think we're one slide ahead still. There we go. Thank you. So the statement will be effective for fiscal years beginning after June 15th, 2021, meaning that it will first be in effect for counties next year, the 2022 fiscal year, if you guys are all on the calendar year fiscal year. The statement will be getting rid of capital versus operating leases and replacing them with a single lease model. This means that we won't need to assess whether a lease meets the 4 capital criteria points to determine how to account for it. Now all leases are just leases, with some exceptions that we will touch on later. The new guidance from GASB is based on the foundational principle that leases are financings. They concluded that in a lease transaction, the lessee receives the legal right to use an asset at the commencement of the lease. In exchange, the lessee promises to make payments over time for the right to use that asset. Therefore, they have financed the acquisition of that legal right. The statement also provides a new definition of leases and defines what is included in the lease term. Next slide, please. One more, I think, should be definition. Thank you. So a contract that conveys control of the right to use another entity's non-financial asset, the underlying asset, as specified in the contract for a period of time in an exchange or exchange-like transaction. So conveying control is when the government has the right to obtain the present service capacity of the asset and determine the nature and manner of use of that asset. Some examples of non-financial assets include land, buildings, vehicles, and equipment. The statement also includes subleases, sale leaseback transactions, and leaseback transactions, but it excludes contracts for services except those contracts that contain both a lease component and a service component. Specifically, counters may enter into contracts that contain both a lease component and a non-lease component, or a lease that contains multiple underlying assets. An example could be IT equipment lease with a related maintenance services component. So for contracts with a lease and a non-lease component, each component should be accounted for as separate contracts unless it's not practicable to separate and estimate the cost of those services. And then for contracts with multiple underlying assets with different lease terms, or if the assets are in different major classes of assets, each of the assets should be accounted for as a separate lease component. We can move on to the next slide. Thank you. The lease term is pretty much the time period the lease covers that you will be using for accounting purposes, which may differ from the actual time period that the lease covers. That's because for accounting purposes, the lease term will include the non-cancelable lease period, the years or months covered in the contract in which neither party may cancel the lease, plus any periods in which the lessee has the option to extend if they are reasonably certain they will, and any periods in which the lessee may terminate if they are reasonably certain they won't. The lease term also includes any periods in which the lessor has those same options and is reasonably certain they either will extend or will not terminate. Next slide, please. All right, so in the last slide and in the lease term discussion, reasonably certain comes up a lot. But don't worry, the great GASB did not leave the term reasonably certain up to our own discretion. And we've created a template that we hope will assist you with determining and documenting whether you are reasonably certain various events or clauses relating to the lease will happen or not. Reasonably certain requires a higher threshold than just more likely than not or expected. There must be a compelling economic reason for something to be reasonably certain. This includes market-based factors. For example, the option period amounts are favorable with current market rates. Contract-based factors, if costs to terminate the lease, negotiation, relocation, cancellation penalty are a disincentive to negotiate another lease. Asset-based factors, the extent to which the asset underlying the lease is essential to government operations. And then government-specific factors, the cost or timeliness of the procurement process, the likelihood to appropriate the funds based on historical experience, etc. There are 5 clauses within leasing contracts for which you'll need to determine whether they are reasonably certain to occur or not. And these include renewal options, termination clause, purchase option, fiscal funding clauses, and then residual value guarantees. This reasonably certain template is found in our December 2020 accounting bulletin that I mentioned at the start of this section. So there's just a little screenshot of it, and you can find our bulletin to download the Excel spreadsheet. The template does not need to be submitted to us as part of your annual reporting. It's just something we created to help you document decisions and rationale behind those decisions as it pertains to the lease term and payments. Next slide, please. All right, or one more, I think. One more back, thank you. So we have the exceptions. So these are the contracts that will not qualify as a lease under this new statement. And that includes a lease with a term of 12 months or less, contracts for intangible assets, licensing contracts, leases of biological assets, leases of inventory, contracts that meet the definition of a service concession arrangement, leases in which the asset is financed with conduit debt unless both the underlying asset and debt are reported by the lessor, and then supply contracts such as power purchase agreements. Next slide, please. So at this point, you should be trying to identify all of your contracts which meet the definition of a lease as we discussed earlier. And it's important to review all contracts too, and not just contracts that may be specifically labeled as a lease. Because a contract may meet the new definition, but it's just not labeled as such. And then while doing this, you can determine the lease terms in accordance with the statement and use our reasonably certain template to document decisions pertaining to certain clauses of the lease and whether or not they are reasonably certain to occur or be exercised. Policies and procedures should be developed so that new contracts entered into by any department in the county are identified and analyzed by the accounting and finance department so that they can be properly accounted for and reported. And then lastly, make sure to utilize your CPAs and attorneys for any questions that you may have when analyzing these contracts. I know they can get pretty complex and involve a lot of legalese, so make sure you use all the resources you have available to you. Okay, next slide. Yeah, and then that wraps it up for us. You had our email from Brian's last slide there. So if you have any questions, feel free to reach out to us at that email and we'll get back to you and help you out as much as we can.
Eric and Brian, thank you so much for your presentation today. We do not currently have any questions, so I want to thank everybody for joining us, and we hope that you will join us for the last 4 webinars that the Virtual County Finance School has to offer. Thank you.
Thank you.
Brian Sheep and Eric Cash. Thank you so much.
Thanks a lot, guys. Have a good one.